All right, well, I'm really excited to introduce our next speaker. She's an award-winning analyst as an earnings estimator and stock picker. She is a regular contributor to CNBC on the retail industry. Please help me welcome Deborah Weinswig, Managing Director at Citi Investment Research.
So we're also going to keep it pretty high level, and we'll talk a little bit about the sectors and the companies that we follow. But I was telling Mike, every summer we do kind of a deep dive after we've gone through our second quarter earnings. And in 2012, it was the idea of empty pockets and how we're going to start to see some weakness at the high end. And this summer we kind of came up with the cheap consumer. So this is our current coverage universe. It will look dramatically different in kind of the December-January timeframe. We're have about, we're probably increased by actually about 50%. So, and we'll be actually expanding. We're actually going to be picking up real live tech companies and expanding more into healthcare. One of the things we always do is it's called this idea of like building the mosaic. So literally we'll like put our foot to the ground, we'll go see stores, the weather does matter. We put out a note every week on the weather. We put out a note every week on traffic into the malls. We talk to, because if you guys see me tomorrow, I will have on another black suit. I wear black every day, and seriously, and we do pay fashion consultants a lot of money to make sure that we do know what the trend is. It happens to be emerald green and animal mania right now, unfortunately, which are not selling, but it goes back to what Mike said with this very discernible consumer, and so, but that's incredibly important for retail. And so we spent a lot of time doing that. But we really spent a lot of time building this idea of the mosaic to help retailers and ourselves understand what will or will not be selling, and to try and build kind of a model, a financial model based on that. So there's the soft inputs and also the hard inputs, and that's kind of what we spend our time doing. And sometimes it takes a little bit of time, and sometimes it takes a lot of time. So start with this idea of the cheap consumer, and this is probably not the easiest to read, but the idea has been, if you look at what happened in second quarter earnings, they sucked. And for every single company that I follow, with the exception of Dollar General and Kroger, who reported this morning, everyone either missed top line or guided down for the back half of the year. So as I mentioned, I've done this for a tad over a decade. I have never seen that in my entire career. So when you see something like that, you really do take note. And obviously we had the Great Recession. That was a special exception. We had 9/11. That was a special exception. But we're not in that type of an environment. So let's take those two out. So there's something going on, right? So people are buying durables. So auto and housing sales are rising. Is the consumer so smart that they somehow know that we're in a rising interest rate environment or about to go into one? Maybe. Is there a lot of pent-up demand during the Great Recession, right? People had cracks in their granite. Their toilets were, I don't think people let their toilets go, right? If your toilet was broken, you fixed it. But, right, were there big things in the home, right? Let's call it $2,000 and above. Were there big fixes that needed to get done that they delayed? Probably. Right? You look at the comps at like Home Depot and Lowe's, 9.5%, that's big. I mean, Saks just did a 1.5% comp. Most of us had like a 5.9% comp in our model. So we as analysts, we're not usually off that much. Like I said, we do spend a lot of time doing, putting our foot to the pavement. So auto sales are up quite a bit, and that's actually keeping, the numbers in terms of retail sales up. So this has been, throughout my entire career, this idea of the hourglass has been what's held everything together, because I cover such a disparate universe. So I cover anything from drugstores to food retailers to, Saks, to J.C. Penney. So how do you put that all together in one chart? It is not easy. So there's this idea of the hourglass, high end, low end, and middle. And what we're seeing right now is that the bottom is really, for the most part, doing the best. And Kroger, you wouldn't say Kroger at the bottom, but you know what they've done is that they've really, from a price gap perspective, for the most part, they've taken that out. Their price gap with Walmart is closer to about 10%. And do you know what else they've done? they're using a technology called Q Vision, so there's no wait time in line. You basically go up and you're out. So max 30 seconds. And so when you take out the wait time, from in terms of a pleasure perspective, I mean, I go to Walmart and I'm like, oh my God, how much time is it going to be this time? And I literally will wear an Ironman watch, and you time yourself, and I guarantee you, it's not 30 seconds. So here's a checklist in terms of what makes a customer cheap. And so we go through, and you're talking about it's a lot of what Mike talked about, so I don't want to reiterate it. But household net worth growth is decelerating. Weak personal income growth. I mean, it's we've got these 12 drivers, and you can look through it. We've got a detailed report. I can send it to you as well. But income, I mean, this to me is like the key driver is income growth is surprisingly weak in an expansionary cycle. Now we dive into every month when it's reported, we dive very deeply into what we're seeing in terms of job growth. If anyone looks at the teenage unemployment rate, it is shocking. It's like 23.7%. So why is that? It's because people who are graduating with a college degree are taking those jobs. So you've just gone to a 4-year program and you're working at McDonald's. So that is what's been happening. So they're getting jobs. They're just not getting the jobs that they thought they were going to get. So here we talk about and underemployment remain elevated. So one of my very good friends actually talked about looking at the employment population ratio as a really good way of thinking about things. And actually, it was very interesting today, actually, and I want to call this out, on Kroger's earnings call, they said that actually in the last few weeks, so basically like the last 3 or 4, they have actually noticed a real softness occurring. So this is something to think about as we go into the holiday season, which of course for retailers can actually be over 100% of their earnings. So it's very important, right? And right now everyone is getting really hyped up. The other thing to note, September is when most of the order cancellations occur. And we're in September. So household net worth growth, consumer confidence moves lower for middle America. This is exactly what Mike was talking about. See, we didn't even coordinate, and we look so incredibly coordinated. So consumer aversion to debt and lower personal savings rate. And mall traffic remains anemic. So this is what I think all of you in this room, this is, I think, one of the most important things is driving mall traffic. So this is where I think, mobile applications, anything that we can do in terms of driving that traffic to the mall. I do think people go in to pick up their packages. I think this is what's so amazing with Walmart and the lockers. So as you are seeing people order online and go into stores. So this chart should not be on here because it's like you need like a magnifying glass. But this is what I spend time doing. So we'll get all this data from a quarter and we will compare it against to just try and pick up trends. But you'll see it was not, it was disappointing across the board, no matter how you slice or dice it. And the thing that concerns me the most coming out of second quarter earnings is we will look at where did inventories end for the second quarter, where are sales projected for the third quarter. It is one of the biggest gaps we have seen, once again, since the Great Recession, which means that there's way too much product out there that needs to get sold, which most likely will get sold at a discount. And here we go. So it's a 500, basically almost a 600 basis point spread. So retail technology, this has been one of the most interesting things. So my husband works at Merck on the venture capital side. And most of the companies I follow know this. And so he's actually been very giving of his time. And he's actually talked to a lot of the companies as they've started to actually form their own venture capital arms, which I think is fantastic. Because it allows them to try things that they wouldn't normally and to push it off into a tiny little arm. And so we every year in January or February will work on a report in terms of what we think are the important retail technology themes. I mean, mobile, omni-channel, sometimes workforce management will make its way into here. RFID has become, but big data. I mean, I actually had dinner with EMC the other night, and we talked about why retailers still are not, I can't tell you, so I have a credit card, which has probably killed my credit score. I have a credit card for every single retailer I follow. I'm on every single email list, and I've opted in for text messages from every one of them. Do you know the amount of personalized anything that I get is about 0. They never use my name, right? I buy from all of them. In fact, I try to buy 100% of what I own from the retailers I follow. And do you know that, there's never, right, I said, everything I wear is black. And I wear a lot of dresses. Nothing is really personalized to me. And in this day and age, when they have so much information, really outside of Kroger, who works with dunnhumby, it is shocking to me the amount of lost sales out there. It really is incredible. And so EMC was just saying that, currently, I mean, right, everyone's out there, they've got, all the data, they try to wrap Hadoop around it and do, there's this still, we're so far. So that, I think, is one of the biggest areas of opportunity for retailers today. So we went through, we actually tried to assign metrics to who we think is doing the best job in investing and actually utilizing. Macy's has actually come up as, I think, not only making smart decisions, but from the amount of money they're spending, but also
like there's store managers who come up to you and say, "Can I help you? Is there anything I can do? Oh, are you looking at that on your phone? Can I price match you? What can I do to sell this to you today?" So they're actually empowering. And I think Walmart's always done a very good job of this. There's store managers who try and get you, to walk out the door with that item.
Oh my God, they're spending so much money. What is this?
So I used to stay up at night, honestly, and talk about this idea of the tech titans, and worry about this. I worry about this much less.
And I think now everyone's like, oh, they're spending money on
I'm sure a lot of you look at ComScore data, and this is kind of visits to sites.
And so it's a real
So in 2012, of all the companies that I follow, going back to what Mike talked about, this idea of global couponing and whatnot, CVS, my entire coverage universe, had the most visits to their site. Why? Because once again, since nobody's really doing a great job of targeted marketing, but you can always think,
what can I do to sell
could
this to
use
today? So they're actually
some sunblock, I could use some hair care, so it doesn't matter if it's targeted or not. CVS actually had the most visits to their sites because why? Every single week, 20% off coupon, 25% off coupon, 30% off coupon, that gets people to go when it's a drugstore type item. In our coverage universe, we've seen actually at the highest end is where you've got the greatest online penetration right now. And really, I do think grocery is the holy grail. Why? Because many of you may or may not know this, because I don't know how much time you spend on the website fmi.org. The average consumer goes to the grocery store 2.1 times per week and spends 45 minutes there. That's a lot of wasted time. And I don't know about you, I don't get a lot of really great benefits from being at the grocery store. And I think someone else will pick my apples just as well as I can. Probably better. So, I also think it's the idea of like the pipe into the home. And so, and who knows what else can go into that pipe? And if any of you guys remember StarMine, who had the refrigerators in the garage sites, because why? Every single week, 20% off coupon, 25% off coupon, 30% off coupon, that gets people to go when it's a drugstore type item. In our coverage universe, we've seen actually at the highest end is where you've got the greatest online penetration right now. And really, I do think grocery is the holy grail. Why? Because many of you may or may not know this, because I don't know how much time you spend on the website fmi.org. The average consumer goes to the grocery store 2.1 times per week and spends 45 minutes there. That's a lot of wasted time. And I don't know about you, I don't get a lot of really great benefits from being at the grocery store. And I think someone else can pick my apples just as well as I can. Probably better. So I also think it's the idea of like the pipe into the home. And who knows what else can go into that pipe? And if any of you guys remember StarMine, who had the refrigerators in the garages, I do think that there's, because everyone says, oh, but you live in New York. You don't understand the real world. You know what? I think that there's other ways as opposed to, I get it. All of us have doormen, and the doormen have refrigerators, and they can put the groceries in there. There's other ways that we can get this to work. It's $1 trillion market on the grocery side. I think someone's going to figure it out, and I don't think it's just Amazon. I think that there's someone else who's going to figure it out. We just had Kroger buy Harris Teeter for click and collect. I think they've also had the test in Denver. I think we're going to see other retailers on this. Walmart's been very aggressive. I think this is the holy grail for everyone right now, and it's what everyone's talking about. Right now, I'm doing literally between 3 and 4 conference calls a week with very large portfolio managers in Asia on online grocery. Every single one. So this is the hottest topic. So we're seeing this is what I mentioned, we're seeing an uptick in terms of spending on CapEx on technology, and Wall Street is rewarding everybody. Can JCPenney survive? So we downgraded the stock to a sell after having been very supportive. And if any of you ever shopped Penney's before, I actually did. I thought they had great children's merchandise and great home merchandise. In June of this year, they completely redid their home department by 90%. So that's a complete redo in my mind. Their home business in the last 2 years has has fallen from 20% of the total business down to 12%. So if you did like what they had,
It's completely different now. The kids side has also changed pretty dramatically, and it was interesting talking to them. They said even the product that the consumer used to buy, they don't buy. And if any of you have seen it, it's like nicer than Nordstrom's in there now. So you don't feel like, I like a dirty, messy store. And right, if you think you're getting like a great deal, and case in point, so Target in Canada, right, all of us know is not doing so great. So if any of you go to Square One, which is the largest Target and the largest Walmart store in Canada, we went. This is the whole story. Target looks beautiful. And I had a whole group of clients, and I was like, oh my gosh, beautiful. You could eat off the floor. Now, mind you, half the shelves were empty, so that might also contribute to, they've got a supply chain issue. But we go there, then you go to Walmart, and the store, and mind you, they supposedly refurbished it. I mean, the place, right, the ceilings are low, it's dark, it looks terrible, but the volume difference in terms of those two boxes, I mean, you could hardly walk through the Walmart. I mean, the consumer wants a store that looks like it's worn, that looks like it's, that they're giving you great prices, and that's not JCPenney anymore. This is a beautiful store. I mean, does this look like Penney's? This does not look like JCPenney. And every store looks like this. They're top 500 doors. Okay? So that Martha Stewart, I mean, Jonathan Adler, this is their home. This is home. So I was very mad at CNBC. I was supposed to be on Walmart, and they cornered me on JCPenney. So they said, we know you support Ken Hicks and Alan Questrom coming back, but what about, Mike Ullman, who's the current CEO? And I said, it doesn't seem to me like the board is supporting Mike Ullman because you've had 11 senior departures, and they've only let him hire one person. How is he going to, make this work? So I kind of turned it around and, didn't get backed into a corner too badly. But this is a problem. They have no management. They don't have a chief technology officer. Right? Our whole talk today is on technology. They have no chief technology officer, so I don't know how you get that to work. So we did a whole cash burn analysis. I mean, they've got some real issues here in terms of having enough cash, which is maybe a little important. Retail M&A is heating up. It could be for all these things we've talked about. Technology is important. Cash is important. You've got some really interesting dynamics occurring. And we did a whole kind of LBO scorecard here with Kohl's, Big Lots, and Family Dollar coming out on top. This is way too small to read. Kroger was fascinating with Harris Teeter. The top two reasons I will tell you they did the deal was literally and the other was literally click and collect. Harris Teeter for
and the other reason was because Harris Teeter, for many of you don't know, is non-union. So this will allow Kroger to grow.
Which is obviously in grocery a huge benefit. So Safeway has gone through a whole metamorphosis, and they have sold Canada, and they have also IPO'd Blackhawk. So this is a company that also looks completely different. And then Saks has gotten a premium bid, and basically they are partnering up with Hudson's Bay. So there's also been a lot of changes here. And we talked about the battle for online grocery. So this is just a comparison in terms of who we've got, and obviously in the US, Fresh and Easy. And the big news obviously this week has been in grocery was with Ukaipa acquiring basically the Tesco portion here. And then in terms of valuation, this is our whole coverage universe and everything you've got. And with that, I think I'll turn it over to Saeed.